The next one is probably just as interesting, given what's happened over the last short period of time, but navigating the financial landscape and exploration of financial crimes, risk, and resilience. So with a whole range of things happen in the background, we had earlier today about the increasing number of scams and the sophistication of them. I'd like to hand it over to Louisa, who will facilitate this session. Louisa is Senior Legal Counsel and Lead Business Partner, Australia Payments Plus. She's also for a number of years been the co-chair of BA Australia Young Leaders. So we thank her for that and a contribution to there. And Louisa, I'll hand it over to you. You've got 45 minutes to take us through this topic.
Great, thanks, Gordon. Our panelists today have a fantastic topic to talk about around financial crime. To start off with, I just wanted to acknowledge the traditional owners of the lands of which we meet today and pay my respects to elders past and present. I guess to really frame our discussion and for context, I wanted to call out these really quite large numbers around financial crime. In Australia, it's estimated to be $60 billion that has been a cost to the Australian economy by way of managing financial crime and also the proceeds of financial crime in Australia. There's also been a report by the ACCC around $2 billion also goes from our funds to scams. That's quite a phenomenal amount of money from our ecosystem that could be put to better use. And to really hone it into why do we care about financial crime? What does it really, like, what do we really, why does it matter to not only blockchain, but to our financial ecosystem? I wanted to introduce our panelists and have them go through their experiences and to really delve into why is it important to them. I might kick off with Christian. Did you want to introduce yourself and dive into it?
Absolutely. Hi, Louisa. Hello, everyone. Great to be here today. So yeah, my name is Christian. I'm the co-founder and CEO of Monoova. We are a Sydney-based payments automation platform. We are members of Blockchain Australia for lots of different reasons. One of them is that we have been very involved in the sort of digital currency industry broadly for some time. I think our first crypto client was signed in April 2017 when they were not very well known. And today still we service a large chunk of the community, but it's not only in that part of blockchain that we're active. We're also one of the selected pilots for the CBDC, pilot with the RBA and so on, and maintain a very live interest in this space. Louisa, did you want me to sort of jump into substantive stuff or just the introduction at this point?
Let's go around for intros and then we can go into the depths of why it's important to you.
Yep.
Thanks. Thomas, did you want to go next from TRM Labs?
Sure. Thanks, Louisa. Hey, everyone. I'm Tom Armstrong coming to you from San Francisco out in the United States. It's great to be here with you. As Louisa said, I work for TRM Labs. Angela, my colleague, was on just a couple of panels ago. I'm TRM Labs' compliance advisor. So I work with a number of our private side customers, financial institutions, banks, crypto businesses, decentralized protocols in helping build their compliance programs in this space and figured out how to operate with safety and soundness, as the regulators say. It's great to be with you. Before I was at TRM, I was at Goldman Sachs for about 9.5 years. I led a number of global investigative teams there, worked with a lot of Australian counterparts, which I really enjoyed. And my last role at Goldman was helping to build out their first digital assets compliance team.
Great, thanks, Thomas. Wealth of knowledge there. Blake, did you want to go next from Bamboo?
Sure, thanks. Hi, everyone. My name is Blake Cassidy. I am currently the CEO of Bamboo. And for those that don't know, Bamboo is a micro savings and micro investment platform into digital assets. My background's pretty varied. I've worked in the space for a while, from living in China and arbitrage trading Bitcoins to working in funds management, software development, and of course my own startup. So yeah, looking forward to being here. Thanks, Louisa.
Great, thanks, Blake. And Cindy from ANZ.
Thanks, Louisa. So I'm Cindy from ANZ's Industry and Innovation team. So we sit in the institutional division of the bank. Our responsibility is to research and identify emerging technologies that will disrupt our business and respond to that. And that's often via industry engagement, partnerships, rapid pilots and proof of concepts with our customers. And in terms of the digital asset space, ANZ has quite a proactive strategy in digital assets. We were the world's first bank to launch an Australian dollar backed stablecoin. And we're also involved with the RBA's central bank digital currency pilot. We actually have 3 use cases in the pilot this year. So very busy and very happy to speak more about the different risks that we're also juggling on top of this. Thanks, Louisa.
Definitely looking forward to delving into that. And we've got Mark from Hall and Chadwick.
Thanks, Louisa. Mark Whaley, Hall Chadwick. We're a national accounting firm, and we've got a team of people that offer forensic services, asset tracing and verification on the blockchain. So yeah, we do a lot of work, unfortunately, in the scam industry, as well as just general commercial disputes and providing expert reports for trial, etc., on crypto matters, and that's, I guess, led to the other parts of the business following, and we're offering audit and internal audit services to crypto businesses.
Great, thanks, Mark. It sounds like all our panelists have such in-depth wealth of knowledge around different aspects of financial crime, both from an innovation point of view, their own businesses, their clients, and then also when it comes to the point of forensics. So circling back to Christian on the point of why do we care about financial crime? What's your perspective? What is it about financial crime that we should really pay attention to?
I think at heart, we should care about crime. And in this instance, it's financial, but it could be lots of different crime. Because it is crime, it's not a system error, it's not a lack of governance or not uplifting to industry best practice or whatever euphemisms we can talk about. These are criminals perpetrating crimes against actual victims. And victims here are not some nebulous conglomerate of banks and people in dark rooms, but these are real people who are losing real money. Financial, in the context of financial crime, is merely the delivery method of the crime. So burglary is a different type of crime, which has a different type of delivery method. But financial crime just means that very often they're using financial institutions to perpetrate the crime. Whether that is a fully fledged APRA-regulated ADI or a payments automation company like Monoova, or it can be small. I understood there was someone trying to use a kids savings app to these things show up all over the place. What I think we should be aware of is that financial crime, just like probably any other crime, has fashion. There are fashion waves, there are trend waves, where certain types of financial crime seem to be super popular for a while, and then, and probably because it's successful, I would imagine. And then once regulators, law enforcement, because again, we need to remember that this is not just a question for, say, Austrac or someone, when we're talking about police officers, I think over and over again, we need to emphasize that financial crime isn't something that happens in the ether, it happens to real people. So just like with any other crime, you have police officers being part of it. And as law enforcement and others get better and better at tracking down one type or one version of crime, and the next one pops up. So I'm sure we'll speak much more broadly about this over the next 40 odd minutes. But so from my perspective, Monoova moves a lot of transactions in the millions per month. And so even a very small portion of a very large number ends up being a reasonably large number. And so we unfortunately are seeing sort of the impact of financial crime through our clients. And our clients are large tech-enabled platforms in their own right. So it could be remitters, could be obviously a digital currency exchange or other investment platforms, PFM tools, a number of different things that are essentially their services are being hijacked by criminals to funnel funds somewhere. And so we have seen puppy scams giving way to romance scams, giving away to, for a long time, there were a suspicious number of servicemen in Darwin about to be deployed overseas, and all of them seem to be needing to sell a ute of some kind, like a $40,000 ute that, could you believe it, that you could have it for only $8,000, but they only sold people in Melbourne who couldn't actually see it. And so, telling a story about being deployed elsewhere and obviously getting a lot of empathy. And then the car never shows up. So that, and then what we've seen recently is truly financial scam. Not just all this is financial crime, but seeing financial scam where we see often very well-established, trusted brands, whether that can be a bank brand or anything like that, being used to say selling. I'm going to make it up now, but let's say it's a Macquarie bond or it's a NAB financial instrument of some kind, and they speak with often British accents, which apparently is trust-inducing, and then there is a whole scheme of how you get someone to start sending you money, and the first $10,000 come back with a return, and you think, oh my god, I'm going to do that, but next time I do 50,000, and you carry on, and at some point you send a lot of money and there are no returns. So we should care, because these are real people losing real money, and it is not unthinkable that these are, in some cases, maybe people who are particularly vulnerable to these things, just sort of selection bias here. So we should be particularly vigilant about it.
Yeah, definitely. I think Mark had also mentioned to me that there's always a victim as well. And I think he was very passionately about that as well, just being able to see those victims firsthand. Mark, did you want to have delve into some of the cases that you've come across and the impact you've seen around financial crime?
Yeah, it's been really sad to see the centre prey on people that aren't very knowledgeable about Bitcoin and the industry, and tend to be 40, 50 plus, even 60 and 70 plus in terms of age profile. And yeah, the scammers are in no hurry. It could be a 3-6 month program to lure people in, could be just an innocent message, and then the crypto thing may not pop up until 3 and 6 months later. And then, as Christian said, it starts off a small amount, and then somehow there's a magic return, and then they'll lure in. And yeah, we've seen people lose, literally their entire superannuation has gone into crypto scams. And as Christian said, often English accents at the other end of the line when the telephone does ring. Some of them dress up their website like you think you're dealing with JB Weir or somebody like that. Beautiful websites, or others. The websites aren't that flash, but somehow people believe in what they see on a screen, and get carried away with these supposed returns that they're going to receive. So yeah, a lot of more mature people, I guess, that aren't very knowledgeable, huge amounts of money. The scams that we're looking at, not uncommon to be $500,000, over $1 million, 2 million. There have been a couple that are even bigger than that. And unfortunately slow to act as well. Obviously the people, feel mixed emotions, and I want to believe that it's still real, and we're brought in, unfortunately, a bit late, but pretty much every time we can trace it through to, again, unfortunately, major exchanges is where these people are hanging out and cashing out. So big question mark about KYC, quality of KYC systems in the big exchanges. Not so much the Australian exchanges, which is, I think, really interesting that we haven't traced many scams to Australian exchanges. They're mainly US, London, been disappointed to see how close some Lazarus marked wallets are to only 2 hops away from transactions on major exchanges. So again, I question how much work is going on in the exchanges to weed these people out. And so, as Christian said, the real people losing life savings. You spend 60 years working and then you've done your dough. So, okay, maybe the people were foolish, but for the industry to prosper, one of the big advantages in our industry is we can see the chain. The transactions are there, permanent, and we can see right down the chain. So, we should be protecting these people. We should be doing more. And ultimately, big picture for the industry, especially now when you see all the stuff that's going on with the banking industry and the issues it has, if we can have a higher standard and be seen as a safe haven, then the cryptocurrency will achieve mass adoption. But if the wider community is scared of it and keeps hearing about the scams, then they'll stay away.
Thanks, Mark. I might jump over to Thomas because I think there's a few really interesting points that you raise around the tracking. With digital currency, there is a tracking element to it, and I think Thomas can really speak to how there has been developments with this new technology to track a lot of the transactions that are going through. One thing to really call out around scams is it's not just for digital currencies. The figure that I quoted from the ACCC around scams for 2 billion was for everything. And as scams generally increase, a segment of it would be from digital currency. So keep that in mind. But I might throw over to Thomas and jump into tracking of the transactions.
Yeah, Mark said it well. I've been doing either research or kind of, pragmatic work investigations and now at TRM for, 12, 15 years or so. And I would say I'm as optimistic now as I've ever been in this space, which is saying something, because most of us, if you've been in long enough, you get pessimistic about whether it's making a difference or not. But it's because, as Mark said, we know so much about what's going on chain because of that public ledger database. And so we could cite any number of examples, and they are very heartbreaking to hear about some of these instances. But the fact that we can uncover them, know about them, share that information as quickly as possible is great for the industry. I mean, I like how Christian started to frame this up around real people. One of the really heartbreaking crimes that we see is child sexual abuse material kind of facilitation. These aren't new crimes. These are, old crimes facilitated with new technology. And like any financial innovation, there's an ability to kind of exploit it. But we've never had the ability to kind of track in the way that we can now where those flow of funds go. And again, there are signs to be optimistic in this space. One of the things that I thought was really interesting was, Mark mentioned North Korea's Lazarus Group, who has been hacking and scamming a number of different protocols and kind of on-chain actors for a number of years. And we recently have seen that they have a hard time cashing out those funds. Mark said there are instances, yes, where they can find exchanges, but they still need cash out points. And so, we need those kind of controls to really be uplifted across the industry. But the fact that we can see across a number of years of their activity that some of their funds are still sitting in wallets, and we know the exact wallet addresses where those funds are sitting in. As soon as there's a hack, we can trace it all along the chain. That gives me a lot of confidence that not only can we make maybe better difference than we've done in years past, but as banks and new businesses think about kind of dipping their toe into the water in this space, we can say with absolute conviction that there really is a way to conduct this activity in a safe and sound manner. And I'll just give kind of one more instance. When I was at Goldman Sachs and we started to roll out a digital asset business, one of the first kind of waves of prospects that we saw were high net worth individuals who had some sort of wealth connected with crypto. They could have been trading Bitcoin for 10 years or an executive from an exchange. And, it made a lot of people at the bank very, very nervous to kind of, think about taking in customers from this space. But as we went out and collected their wallet addresses, we could line up case for case. Here's exactly why we're comfortable with this one. Here's exactly why we're not comfortable with this one. And here's the evidence on chain of their transaction history to help support that decision. There's not a lot of guesswork there, as opposed to, in traditional finance, a lot of the times you're speculating or you're taking any number of kind of pieces of paper that they send at their word. Anyway, so all that is to say is, again, I'm super confident that, we're just in the beginning days of the technology and the tools that we can kind of impact to kind of lessen the amount of financial crime that's going on.
Cindy, I might jump over to you because I think you are at the pinnacle of traditional finance meets innovation. And I think a lot of the sort of risks that Thomas and also Mark mentioned around, existing risks that traditional finance would be managing, we're seeing it come together, and maybe blockchain, there's solutions in there that we can then learn from and integrate into what we provide to our customers and our own business. Could you delve into that and just explore some of the possibilities that you've seen through the use cases you've been working on?
Yeah, definitely. Thanks, Louisa. I think it might be helpful to start off with emphasizing the house view of ANZ on digital assets and currencies. And that is, we totally accept and acknowledge that they're here to stay. There will be ups and downs, but the underlying technology is very powerful. And we believe that it will form the next generation of financial markets infrastructure. So that's actually the view of the bank and how we're approaching it, which is quite extraordinary considering the level of risks and some of the controversies we've seen in the sector recently. We understand that this is a space that we have to play in, we have to be prepared for, but we also want to manage those risks properly. And in the innovation space, which is where my perspective comes from, there is a very interesting and natural tension between the need to innovate, the need to stay ahead of our competitors, and to bring in emerging technologies that could have incredible benefits for our operations and our customers, but also controlling them. That's a very inherent tension that we have to deal with. So I think in my current role, where we know we can't do it alone, and we often have to partner with fintechs, not only for the capabilities, but increasingly looking to other parties for financial crime risk management as well. And I guess there are some of the challenges that we face in the blockchain and digital asset sector. So number one is probably the lack of knowledge and up-to-date knowledge. I might just correct myself in this space. People who have been working in this sector for years still say, every month I'm learning something new. Every month I'm discovering a new standard, a new protocol. It is moving incredibly rapidly. And so this affects all stakeholders, not only banks and fintechs, but financial regulators like FATF. They are also having to keep up with all of these developments. And secondly, that goes into the regulatory standardization piece. So a lot of the risk we find when we try to create solutions with our customers is different jurisdictions have different maturity in their regulatory framework for digital assets and blockchain. We still have different definitions for a lot of things. There are organizations that are working on this. So ISO, the International Organization for Standards, they have a technical committee, ISO 307, that's been developing those standards. There's also the European Blockchain Partnership, which is it's been operating for a couple of years now. And they try to actually bring regulators in to work with blockchain hands-on in a sandbox environment, so isolated from other systems, so they can understand it quickly and then develop the regulations for it. So far, I'm speaking more from a kind of holistic landscape view, but in terms of the technical sort of risks or some of the more specific risks when it comes to using them, so I come from the institutional banking division, and our customers are large institutions. They're often they're very cautious about how they hold, digital currencies and assets. Custody is obviously a huge consideration. Do they hold it in a hot, cold, warm wallet on an exchange? How safe is this exchange? If they deposit their money on there, Do they know that this exchange is abiding with sanctions, regulations, AML, otherwise a reputational risk from accidentally facilitating, criminal activities or being associated with that platform is extremely significant. And there will be a lot of fallout from that, as we've seen with some of the platforms that have fallen victim to heists and scams and things like that. I also think probably, again, speaking from more a enterprise level, the lack of transparency between off-chain and on-chain liabilities, making sure we have that transparency into what's happening in, if you're a stablecoin issuer, are you actually holding that amount of money that you're saying is backing your coin? What are the reporting obligations around that? Can we actually see that? And I guess at a higher level, that all still plays into, do we trust this platform? Can we rely on them? If there is a dispute or a scam or, there's a financial crime related incident, who can we go to? Is there actually a face behind this organization that we can actually talk to and help solve this problem with us? So I'll cap it there, but that's a lot of the major concerns and risks that we see from our customers stem from this space. And that regulatory piece, that standardization piece, is absolutely something that banks see as being critical to combating financial crime.
I might jump over to Blake, given you're in the space where there is a face to the platform, there is a face to Bamboo, and you're dealing with these issues on a day-to-day basis and finding really innovative ways to incorporate what is an everyday need into sort of your solution. How have you been looking at that, and sort of what are your views on this?
Yeah, thanks, Louisa. I can certainly talk about this from a product point of view. We really looked at many of these issues early on in the Bamboo journey and figured out how can we mitigate them as best as possible. And we really landed on developing a closed loop ecosystem, so then it could, mitigate the effects of money laundering, counterterrorism financing, and really reduce those. And I think but what's interesting about that as well is that when we're dealing with established institutions, payment processors, banking partners, other actors in the ecosystem, it's interesting, regardless of the fact that we've mitigated many of these issues, we still have to comply with regulation, like developing AML policies and checklists and training programs, regardless of the fact that these things aren't possible through the Bamboo platform. Which just really demonstrates that, there's a lot more work to do with the regulation and how compliance is administered. I don't think generally the risks are really identified. It's really a box ticking exercise to ensure that people are doing what they're meant to be doing, as opposed to looking at the real issues.
Thanks, Blake. I think Christian had mentioned something along the lines of we're seeing the requirements of AML, CTF really being imposed on digital asset space, but really making sure it's fit for purpose. And I think surprisingly, Mark had mentioned that in Australia, the digital currency exchanges are quite good in comparison to international exchanges. And that's fundamental. Like, our AML CTF requirements for digital currencies were sort of one of the first that came in internationally. So we'd love to hear your views, Christian, around, having not only you providing payment services and being an on and off ramp for a lot of the digital currency exchanges, that balance between innovation and also regulation and having that guidance for your customers as well to navigate that space.
Yeah, I think maybe one point to make early, and I can't remember if it was Thomas who said this, but is that these are not new crimes, I think was the expression Thomas used. And I think that's really important, because we have a tendency, and I'm not in crypto myself, even though I know the industry reasonably well, but we tend to think of these crimes as being crypto crimes, when that's not actually, that's just like saying a bank heist was a car crime because they used the car on the way out. It was a bank heist. That was the thing. Or some of these particularly odious crimes really involving children, etc. That's the actual crime. And then the crypto or the whatever, that's just a means, if you want, to then removing the proceeds from the actual crime. So I think it's important because in the conversation around risk, if you're talking all about the sort of means of transport, then you might actually miss out a lot on where the true prevention should happen. The true prevention is not, are you using a normal fiat wallet or bank account to squirrel away your ill-gotten gains, or are you using an on-the-chain wallet to do it? That is important. It's component parts of how we fight these things. But the actual crime has happened often very long before them. The actual crime is a person inflicting harm, danger, etc., on another person. And so these aren't crypto crimes. These are crimes where sort of crypto flows are part of how they get out of the scene of the crime, just like driving a car from a bank heist or a burglary or whatever it is. So we would never call them fiat heists. We wouldn't ever call them a fiat scam. We'd call it child molestation. We'd call it something else. So I just think that's important, because the risk conversation then, what's the innovation versus regulation component? I don't think one can. It's easy to think of it as being like an either or thing, but I think experience has shown, not just right now, but historically, that often the best innovation happens when there is regulation. And that is because some things can be taken, not as granted, but can be assumed to be common rules. And that means that you can focus your investments in innovation on some things and not everything. You don't have to reinvent everything there ever was, because there's some guidelines and some guidelines that are already in place. From Monoova's perspective, when we started supporting crypto in 2017, there was no AUSTRAC registration to be had for DCs, but there was the, what was it called, ATCA, Australian Digital Currency Association, or something like that, which was so basically digital currency exchanges, the early pioneers, coming together and saying, we're finding it really hard not to be regulated. So actually, in order to spur and further our innovation, we want to regulate ourselves until someone else does it for us. And that helped us, because it meant that in the first, I think in 2018, so already a year later, AUSTRAC brought in the registration for DCs. It just meant that we had something to go by. We knew that if you're showing up at our doorstep and say, I want an on and off ramp, and you're not with ATCA, if I remember the acronym correctly, then the first question we asked is, why not? And in some cases, which is they never heard of them, everything was very young, and so they went and got registered, committed to the sort of the guidelines and rules they had, and then they came back and fine. So I actually think regulation and innovation they're not just not incompatible. They, in fact, I think they really spur each other. It sort of helps if you know the laws of gravity, then you can design a better plane, and it's sort of a bit like that, I think, Jim.
Yeah, 100%. Did anyone else on the panel wanted to add to that? I think Thomas has his hand up, and also Cindy.
Yeah, I'll just say really quickly, Blake mentioned something, and I think Christian hit on it as well, is that the conversation has too long been focused on just regulation. Regulation is really important. It helps, with jurisdictional arbitrage and that type of thing. But recently, FATF has come around to emphasizing more effectiveness. So it's not just enough that you have the basic components or elements of a compliance program and a risk management framework. The conversation really needs to be more about, is your program actually effective at doing what it's supposed to be doing? So Blake mentioned, there's a lot of tick box or checkbox exercises. And because a lot of the elements of an AML program have been around for so long, they become commonplace. It becomes, a little bit lackadaisical in their implementation. And what really needs to change is institutions thinking about, are we actually effective at stopping, preventing financial crime, giving law enforcement highly actionable intelligence to help them, do more cases. I think that's really, really important. And there's lots of ways you could think about how you actually change that conversation from, do we have the basic components, to are we actually being ineffective? But I think FATF's going to start emphasizing this. In the U.S., it's a big area of focus. Hopefully, it spreads in other jurisdictions as well.
I wanted to add on this as well, just echoing what Christian said about how these are not new crimes, they're existing crimes committed with a different technology. And often that's something we need to keep in mind. Even in the financial crime teams, in the bank, often there is a cultural mindset of, oh my gosh, it's a crypto crime, let's stay away from crypto. And that's just with the rate that this technology is being adopted and the efficiencies that it could bring, that just can't be the approach, right? So there is a cultural mindset thing that also needs to change around the use of, digital assets and currencies and blockchain. And that will take time. That will take, education and knowledge about the real use cases. And then also looking at the effective ways, like Thomas said, to actually manage and control them and focusing on that. And the other thing I wanted to mention is with everything that's happening, there's often also a real need to challenge the traditional control environment, which I know that, the risk teams don't like to hear. But when you want to innovate and also manage the risks at the same time, and do that in parallel, then you need to adopt a different approach. You need to be tailored, depending on different technologies. And often there's, a real desire to have something that's uniform and, standard within the bank. And this is not talking about global regulations, but within the bank, sometimes if you're working with emerging technologies and you need to invest and stay competitive in a certain area, you need to look at what the risks really are and kind of play to that. And ANZ's actually, I don't know if the other banks have done this yet, but we're launching a sandbox specifically for innovation, rapid testing of blockchain and crypto solutions with third parties, with fintechs, specifically so that we can manage those risks. And so going back, Louisa, using technology, new technology to test other technologies, that's something we should also think about. Blockchain can also provide other opportunities in forensics, and we should leverage that as well. So I just wanted to quickly add that too. Oh, sorry.
Thank you. And just before we wrap up, I think my last question to all the panelists would be around bringing back to, okay, well, what now? What can we do now to really build that resilience and really cement a really strong foundation for this ecosystem, but also how it interrelates with existing financial systems. So we have seen the fallout overseas in America, but what can we do here? How can businesses build resilience today? Thomas, did you want to kick off?
Yeah, I'll go back to, so if you look at any number of the kind of collapses from 2022, early 23 up to, Silicon Valley Bank, but FTX obviously the most notable, most of those failed because of some sort of failure in risk management. And so, we could have a whole panel talking about how to make risk management better and building resilience. But I'll just say, practically speaking, one of the ways that I find it most helpful is if compliance and the business are on the same page. I'm a compliance officer at heart, and so I'm always biased in kind of thinking through that paradigm. But, at Goldman Sachs, for example, we had, weekly meetings with the business as they were developing new products, new technologies, and kind of talking through their strategic priorities for this space, and being in those conversations to either challenge or prepare ourselves to kind of, make the right controls as they were kind of rolling things out. A lot of the times there's a bifurcated world of the business does this and compliance is in the background. And, I think the more that you can kind of merge those two worlds and move hand in hand as the innovation develops is some of the biggest just practical day-to-day things that you can do. In addition to, a lot of the things that Cindy mentioned, that risk specificity has to be matched with control specificity. Crypto's not monolithic. So much education that needs to be done to understand all the different components and how to be very specific in how you kind of attack those risks. So yeah, would echo all of those.
Christian, did you want to go next?
I always do, but I am conscious that I have spoken a lot. So very happy, Louisa, for you to give the word to others.
No worries. Mark, did you have any thoughts on that, since given you've got a lot of sort of experience with the fallouts?
Yeah, look, I guess it's probably something that's not necessarily widely understood in the greater community that, because we do always talk about, there's a lot of talk about scams and things like that, and you hear the stories about, all the bad actors. Fundamentally, through, the history of Bitcoin, Ethereum, etc., the technology works. It's 100%. That is obviously a massive positive for the industry, and that technology, as we've said, does provide opportunities to clamp down on the bad actors. In this, as the heat's turned up in traditional finance with issues going on overseas at the moment, well, this is an opportunity. But I am, I guess, a bit wary in that obviously there are financial pressures in the industry at the moment with, drop in volumes and prices. So I am, a little wary of some of the things that we're seeing, that, certain exchanges where we didn't used to see bad actors cashing out, that they're not even hiding their tracks at the moment. They're just going straight out the door. Whereas 12 months ago, there'd be all kinds of things that they tried to do to muddy the waters. So it's disappointing, I guess, that we can see some of these scams are just cashing straight out. They're not hiding anything. So I guess that's in terms of resilience, very important thing to put on the table if people are suffering some financial stress, is don't drop the bar at the moment in terms of risk management.
Thanks, Mark. Given timing, just to wrap up, it sounds like there's so many different levels. Like if you're thinking from a business point of view, how to implement your own risk management processes, how to deal with it within your own house, and then looking externally at what's the standards, what's the regulators doing, what are the regulators doing, and the financial landscape that's moving quite quickly. So I just wanted to say thank you to all the panelists, because it's been a really fascinating discussion. I think we could have gone for a few hours on this and delving into all the different risks and ways we can look at it and tackle the problem. So thank you so much. And thanks again for being involved in our discussion today.